Well, thank you, Jen, and welcome everyone. It's a pleasure to be here today to help you on this very important topic. We're here today to make sure you have a good experience understanding what a reserve study is, reviewing your reserve study and finding the key information in it, and then applying that information for the good of your association. Now, we prepare thousands of reserve studies throughout the year, and our regular clients generally know what to look for, but we want to help you again, have a good experience knowing what you're working with. So whether you're using another reserve study provider, you recently received a reserve study from Association Reserves, or you're soon to receive a reserve study and start tackling the budget process at your association, this program was designed with you in mind. I'm going to start out with the agenda. This is what we're going to be addressing in today's program. I'll set the stage with a challenge and help you understand what a reserve study addresses, and then we'll help you understand why it was prepared. Then I'll hand off to Chip, who will guide you through the meat of today's program. So we start out with the challenge. It's understanding that living in community is a rather unique type of situation where everyone's together, but some things belong to the association, that's the common areas, and some things belong to the individual owners, the private space. Now, what's key is that the board is responsible on behalf of the owners to take care of the common areas. That's their delegated responsibility. And so they're trying to take care of all these common areas while all these common areas are deteriorating. And deterioration is expensible, predictable, and it's continuous here on planet Earth. Mother Nature and Father Time are just doing what they do, and they don't negotiate. So you have to address how are we going to prepare for, how are we going to deal with all this deterioration of our common areas. So it's important to understand right at the beginning that the deterioration defines the cost of reserve planning. It's not the board, it's not state law, it's Mother Nature and Father Time driving things closer and closer to the point in time when they need to be repaired or replaced. Now, it is up to the board, however, to set a budget that keeps up with this deterioration. And so they have that balance going on. Mother Nature and Father Time are driving expenses, and it's the board's job to set a budget that keeps up. And I enjoy this cartoon. It shows a board meeting going on. The board is all flustered. There's people reacting to the talk about the reserve plan for replacement of, as you can see, roofing, asphalt, stucco, things that are in the future. And this gentleman is saying, as we hear so often, why should I contribute to reserves? At my age, I don't even buy green bananas. I don't care about these things in the distant future. And that's a fundamental concept that we want to address right here at the beginning, because reserves are not for the future. Reserves are effectively an ongoing usage fee for the common areas. Think back, the slide I showed you, all the common areas are in a steady, constant, slow, day after day, week after week, month after month deterioration. And reserves gradually offset that with a usage fee. So it's the bill for ongoing deterioration and paying that bill so that at the right point in time in the future, the board has collected enough from the homeowners to be able to execute the projects in a timely manner. So that's the challenge here. The board's responsible for common areas, and Mother Nature and Father Time are wreaking havoc with all your common areas that just as soon as you get them in a good condition, they're already deteriorating. So it's a matter of keeping up. So let me introduce what you're looking at with the reserve study. Well, it starts out with the whole idea that you're not an expert. As the board, you are responsible for taking care of the association on behalf of the homeowners. You will be judged on how you do from a legal point of view across the country on this thing called the business judgment rule. It's a 3-part test that says you're going to be judged on your actions based on, did they match up with your duty of care? Did you look after the needs of the association? Did you care about it? Duty of loyalty, meaning as the elected officer of the corporation, did you put the corporation's needs first before your own? Did you do the hard work? Did you make that budgetary increase that the association needed? Did you answer that email, answer that phone call? Did you do the work when you were tired or you didn't feel like it. And number 3, that's where I want to address here, that duty of inquiry. When you don't know, you need to reach out and show that you reached out so that you can make the best decision on behalf of the homeowners for the good of the association. And so you think, why should I reach out? How important is this? Well, you want to reach out because you don't want to get wise counsel from someone who is not wise. And I enjoyed this picture of a kind of a stereotypical used car salesman. You're not going to ask this used car salesman, you're not really expecting the truth about this car. It's going to be some sleek red beauty and it's going to work great. And you kind of don't believe it. Well, that's not what you want with a reserve study. You want it to give you things like the confidence that it was prepared independently. There wasn't someone that had a vested interest in something else going on other than the truth of the matter. You want it prepared by someone who is reliable and expert. And since everything is changing, you want fresh information. You don't want it too old. So hopefully you're looking at something that was independent, reliable, and recently prepared. Why do we care about this? Because classically, reserve funding is going to be one of your single largest budget line items at the association. It's worth getting wise counsel to guide you forward. As shown in this chart, reserve funding is typically somewhere in the range of 25% of your total budget. The range that we see is somewhere between 15 and 40%. But this is a big budget line item at your association. It's important to be pointed in the right direction because you don't want to be wrong with a number this big. So what am I talking about? Independence means no conflict of interest. So it means probably not a management company rep who's interested in not rocking the boat too much and getting the board upset because they want to retain the management contract. That's their income stream. You also probably don't want a board member making key decisions in this, a board member or a homeowner volunteer, because they're a homeowner. And as a homeowner, you may want to not increase the assessments. You have a vested interest in not spending your money. So that's what we're talking about, no conflict of interest, someone who has other agenda items going on. You want it prepared reliably. And so look for 2 credentials. Look for name on the cover that has an RS seal or a PRA seal behind their name, or the abbreviations RS or PRA. That stands for Reserve Specialist or Professional Reserve Analyst. That would give me confidence that it was prepared by someone who knows what they're talking about, has experience looking at a physical situation, making judgment calls on the basis of what they see. Is it new? Is it medium? Is it old? How much is it going to cost? And then being able to do the financial analysis to figure out, how does the starting balance calculate out? How does the funding plan roll out over the next 20 or 30 years? And then how can they communicate effectively in writing? So it's a consistent document that you can comprehend. And also, when we speak about recently, National Reserve Safe Standards talk about it needs to be done within the last 36 months, last 3 years. And Fannie Mae and Freddie Mac are also standing on that line. So I understand your state may not say how often you're supposed to do a reserve study. Your state may say perhaps every 5 years or every 10 years or some other number. But a reserve study is going to go out of date, and it goes out of date very quickly. And National Reserve Safe Standards and Fannie Mae and Freddie Mac say it's out of date after 36 months. Again, what am I looking at? You're looking at a document that is going to tell you 3 things, and Chip will go into more detail on these, but 2 of them are findings. Number 1 is, what are we responsible to repair and replace? And number 2 is, do we have enough cash now to begin to address these things, or are we already behind? And then you're going to get a 3rd piece of information, and that's a recommendation for action. It's a multi-year funding plan to make sure you have enough dollars when you need it. Everyone paying their fair share, offsetting deterioration. It's that ongoing usage fee that I mentioned just a moment ago. And what I want you to do is, when we talk about a reserve study needing to be updated regularly, please think of a reserve study as a perishable commodity. Maybe for you, that's a banana or an avocado, because every year the component conditions change. Everything is getting older. Unless you're doing some good preventive maintenance or painting some things and fixing them, everything is getting older. Every year, due to inflation, the project costs change. They're going to increase. And then every year, the cash in your reserve balance changes, partially because you make additional deposits through the year, partially because you spend the money, and partially because the bank is depositing interest in your reserve fund. So it's all in a continual situation of change. I could also say this is a little bit of the conflict or the original situation. Every year, you are responsible to make the budget decisions that sustain the association's common area assets. Even though it's a complicated situation, even though it's continually changing, you still have that responsibility. So you get the information you need from an updated reserve study. And now at this point in time, I got to turn the microphone over to Chip, who will talk about actually those three things. What does it tell me? So Chip, welcome to the program.
Thanks, Robert. I appreciate it. And I'm really thrilled to be speaking to so many people online, especially here for the first time. So let's get to how the information contained in a reserve study can answer three fundamental questions, particularly during a budget planning season. What are we reserving for? Do we have enough cash? And what do we do now? So these are the basic building blocks of your reserve study, and it provides your reserve study results. The component list is what I'm going to talk about a little bit now. It's the fundamental, foundational building block of the reserve study. It answers the question, what are we reserving for? Here's an example of a component list. It contains fundamental information such as description of the reserve component repair or replacement project, UL, which means useful life, how long we can reasonably expect the component to last, RUL, which means remaining useful life, how much is left of the serviceable useful life to date, and cost, how much in today's dollars it would be to repair or replace the component and bring the useful life back to full expectancy. With that information, you can determine the current value of deterioration, also known as the fully funded balance. For example, let's say you're working on next year's budget and you see that pool furniture has a remaining useful life of 0, meaning 100% of the value of deterioration has been consumed by the community, and the $4,600 cost should be in reserves and available to perform that project. The next line, pool resurfacing, you see that would cost $10,000 and is now 50% through its useful life. Therefore, the reserve fund should have 50% of the $10,000 or $5,000. Your reserve study will do that for each component and calculate your current value of deterioration or reserve or fully funded balance. But you might ask, how does something get added to the reserve component list? Well, the Community Associations Institute, CAI, has developed National Reserve Study Standards. Those standards have established a three-part test to identify components. First, does the association have the obligation to maintain or replace the existing element? Typically, you look at your CC&Rs, your governing documents, the plats even, agreements with municipalities, is a myriad of things that could affect whether or not the community is responsible for something. Second, can you reasonably anticipate the need and potential schedule for a repair replacement project? Third, is the total cost of the project substantial enough for the community to fund it through reserves? So you look at what can be reasonably anticipated in costs and include all direct and indirect related costs, for example, installation, shipping, sales tax, etc. Once you have identified those common elements that qualify for the component list, the next step is to determine the answer to the second question. Do we have enough cash? Therefore, we look at the strength of the reserve fund. Knowing what to add to the component list and the cost of repair or replacement projects, we now know the cost or value of deterioration. Now we can check the amount of reserve cash that we have in the bank. Typically, it's in a balance sheet listed under assets. Is there enough supply of cash to meet the demand to cover the cost or value of deterioration? The answer is going to tell you if your reserves are in good, fair, or poor condition. So what is the temperature of your association's reserve fund? You need to identify the percent funded to answer that question. For example, if your component list tells you that a fully funded balance, the value of deterioration, would be $100,000 and there is $75,000 in the reserve fund, then the fund would be 75% funded. That is much more powerful to know than just how much is in the fund. Percent funded helps define the level of risk of special assessments. On this chart, the vertical axis defines risk level of special assessments. The horizontal axis shows the percent funded. As you can see, the percent funded has a direct correlation to special assessment risk. When the reserve fund is underfunded, the risk of special assessments is high, whereas a stronger reserve fund, typically at least 70% funded, has a much lower risk of special assessments and is prepared to meet the needs of addressing ongoing deterioration. And if funding provides additional margin for surprises, even better. Back to our building blocks of a reserve study. The reserve study has now defined the component list and the current reserve fund strength. Now we're ready to answer the third question. What do we do now? The answer is found in the reserve funding plan. Some may look at the bank balance and think there's plenty of cash available. It seems like a lot, but then again, roofing is expensive, asphalt is expensive, elevators are expensive, building exteriors are expensive. You get the point. Really, the key to minimizing your reserve funding needs is to prepare the fund for those expenses by spreading out the cost over the years. This chart shows predicted reserve expenses over the course of 30 years. You want a funding plan that will fund those expenses, like the thin line running above the expenses demonstrates. A reserve fund at that level ensures there is enough in your reserve fund to do those projects when predicted and at the expected cost. However, what if things don't go according to plan? Components may not last as long as predicted. They just don't make things like they used to. Or a spike in costs can happen due to hyperinflation, tariffs, or other unpredictable market forces which drive costs higher than anticipated. You could even have a component where its use can change in a way that it shortens its useful life. A strong reserve fund provides a cushion or margin to absorb those and still maintain the community without having to resort to special assessments or deferring projects. That is why it is the best practice to provide a funding plan that not only meets the predictable, but to also plan for the surprises that may occur. The thin green line across the top demonstrates a reserve fund balance that will provide the community and the board with peace of mind. You may notice that the thin green line at the top does oscillate along with the predicted expenses, but not as abruptly as the thin blue line. A little margin allows for unexpected expense and a smoother and more equitable funding rate. A little margin can lower special assessment risk significantly. The funding plan can provide a guide for sound budget planning. Here's a little perspective. No matter what type of association, we find that reserve funding needs to be in the 25% range of total budget to offset the cost of deterioration. Some associations need more, some need less. If your reserve funding is significantly less than 25% of total budget, there's a good chance you'll be underfunding reserves and the strength of the reserve fund will diminish over time and not be able to meet the needs of the community. So now what to do with it? In my experience as a professional community association manager, a current reserve study is a key tool in preparing annual budgets and as a reminder of what to expect. So for managers, prepare RFPs, requests for proposal, so the board can make thoughtful decisions on who to hire to execute some of these projects. I have always found that developing a reserve budget first and separate from the operating budget will help the board and the association to stay focused, not just on the requirements of the coming year, but also the long-term care of the community. So use the reserve study for guidance. Look at the component list for projects that are anticipated and scheduled for the coming year. What is your projected reserve fund balance and projected reserve fund strength at the start of your next fiscal year? Recommended funding in the study for your next fiscal year is intended to address ongoing deterioration and ensure the fund is strong enough to meet the future needs of the community. So, what to do with it? Again, a reserve study is a predictive guide in determining the fiscal needs of the association, but we know that things can and frequently do change. For those reasons, reserve studies should be reviewed annually, typically before the budget planning season starts. Don't hesitate to seek guidance from your reserve study preparer. They can make sound adjustments and update your reserve study to reflect the reality. Don't fall prey to the temptations of putting off repairs or underfunding reserves. Deferred projects always cost more than if they were performed on time, on schedule. Seeking to control costs without regard to the necessities can be a very slippery slope. Boards of directors have a responsibility to address ongoing deterioration. The funding plan is there to guide the board and provide the recommended funding levels necessary to preserve, protect, and enhance the community. Wishful thinking that decisions to underfund reserves or deferring maintenance rarely work out. A reserve study can help provide value information to all homeowners on the true cost of living in your community. You need to share the reserve study information with them and help them understand how to read it. Let them know that the board is acting in the best interest of the community. And the reserve study is there to provide evidence that the board is making sound and knowledgeable financial decisions for the community as a whole.
Thank you, Chip. A lot of great concepts there, reinforcing the idea that there are basically 3 results in a reserve study. And we want you as the board and management to understand what's going on, to be transparent, to be able to communicate these major ideas and issues to the homeowners so they understand what's going on with our community, what we are facing. So what I want to set up is just a little bit of a pop quiz. If I were brand new, I would want to know what's the big projects coming up soon. And you can see that in your component list. It's that list of projects that Chip spoke about. Look for projects that have a large current cost and also look for projects that have a low or a small remaining useful life. Those are the projects that are coming up soon. So brace yourself, look for those. If you print it out, highlight it. Those are the big things that are coming up soon that you have a very little time to prepare for. You need to pretty much be able to jump on those pretty quickly. And again, that should be pretty clearly identified in the reserve study. You'll find the dollar starting balance and the evaluation, the percent funded. And that should basically match, the dollar amount should match what you see on a regular basis from your financial reports, your monthly financial reports talking about how much you have in reserves. So make sure that that's a good fit. If you've been seeing that your monthly financial reports say that you're in the range of $250,000 to $300,000 in reserves, that's what you want to see in your reserve study. Continuity. If they are suggesting that you're going to start with 500 grand or just 100 grand, you're probably going to want to double check to find out why that is so different than what your expectations are. And then you're going to want to know, what do I do now? What am I going to brace for? What's your recommended funding? So look in the reserve study and find out what they're recommending for the multi-year funding plan. It's typically laid out for 20 or 30 years what's important to you of primary importance is what's your recommendation now for this upcoming fiscal year. And then you're going to want to flip to your current year-to-date budget to find out what you're currently funding reserves at, what rate you're funding reserves. And you want to compare those two to see if the reserve study is recommending a significant increase, a minor increase, to hold that funding plan steady, but that'll affect how you communicate the issues to the owners. And Chip just spoke about that, being transparent. It's our association. Our roof is getting old. Our asphalt is nearing the time that it will need to be sealed or resurfaced. So that all, knowing the three basic points, your component list, your financial starting point, and the recommended funding, that will inform how you communicate the results to the owners. And you're going to want to know, to prepare yourself for questions, what percent of total budget will that be? We've shared that it is common for associations to need to fund the reserves at roughly 25% of budget. So if you do the calculations of your new reserve transfer rate and find out that it's 21%, and you get some feedback from homeowners that that's outrageous, you can tell them, well, the national average is more like 25%, so we're still doing okay. Or even conversely, if your funding is up in the 28 or 32%, you can say, well, it's higher than average, but that's because we have all this wood siding. We have all these nice wood decks. We have extensive asphalt. We've got plenty of guest parking. That all comes at a cost. So prepare to be able to communicate to the homeowners. We want to get you ready to apply the reserve study. And it really boils down to being able to budget to pay your bills. You don't negotiate with Mother Nature and Father Time. The deterioration bills are coming. So when you are prepared to pay those bills, you minimize special assessments because you have the funds ready. And when you have the funds ready, you minimize any deferred maintenance and the higher costs that comes with maybe rebuilding something instead of just painting it. You maximize owner enjoyment because you enjoy coming home to it. The place looks nice. And that enhanced appearance, that curb appeal is real. You will get your money back in maximized property values. It's one of the greatest real estate investments you can make. So it's not money spent and gone. It's just money that you transfer from cash in your pocket into equity in your home. So we just want to set you up for ways to communicate results to your homeowners. Now, depending on where you're at, your reserve starting point, it may take a few years to get to that improved future, but it's a journey that's worth taking. And the reserve study is going to be the guide that takes you there. Again, it outlines your components, which are the things you're responsible to repair and replace, when they're going to happen, how big they're going to be, the evaluation of your reserve fund, and the recommended funding. And that's consistent across the board, whether it's association reserves or whether it's any other provider out there. That's the information to look for and to get comfortable with that's in your reserve study. And that's the end of our prepared content for today. We've got plenty of more information at our reserve site, at our website, which is reservestudy.com. We learned a lot in preparing over 100,000 reserve studies, and we've shared a lot of that on our website. If you want to go directly to YouTube, as Jen said, in about a week, this recorded webinar will be there, and it'll join all the other recorded webinars and shorts that we have. And so just search for Reserve Studies on YouTube, and it's a pretty good chance you'll find our material. Another great free resource, if you're a podcast type person, we have a 30-minute weekly podcast for board members called HOA Insights, Common Sense for Common Areas. It's there to encourage and equip you for the hard work you do leading your association forward. You can find that on all major podcast platforms. You can find it on YouTube, and you can also listen from the podcast website, which is hoainsights.org. And if you're a reader, if you like having a ready reference desktop guide, you can get a copy of our book called Understanding Reserves. It covers all the information that we addressed here in today's webinar. You can grab that from Amazon pretty readily for $29.99. And with that, I'll turn the microphone over to Jen, we'll coordinate our Q&A time together.